All right, let's take a look at the metals market and the currencies in today's video. Um, I guess at this point, I think I'm convinced this is a daily cycle low. So this would be the third daily cycle low, and we're starting the fourth daily cycle. I don't know that I've ever seen an intermediate cycle that's had 5 daily cycles embedded in it, at least not once the cycles evolved to where they're running much longer than they used to 5 or 10 years ago. Used to be a normal daily cycle in gold would run about 18 to 23, 24 days. Now they can run as long as 35 to 50 days. Um, so the expectation, I guess, at this point would be that this fourth daily cycle here will probably left translate and then give us an intermediate cycle low whenever this bottoms. And if I go ahead and label this as a daily cycle low, then we're going to be, this would be day 14 of a new daily cycle. And so far, this is left translated in that this has been the high. The high has occurred on day 4. I don't know whether that's going to hold or not. Gold could still come up and make a higher high. It could even retest these all-time highs or even make a slightly higher high. But as long as this daily cycle tops before day, let's just call it day 20, as long as the daily cycle tops before day 20, then the expectation would be that it's going to left translate and then at some point move below this low, which would be a failed daily cycle. And you really need a failed daily cycle to confirm an intermediate decline. All right, so during this part of the rally, you can see all the signs were there that we were still in the advancing phase of an intermediate cycle. RSI was embedding or getting heavily overbought. Any pullbacks along the way were bouncing quickly from this from an oversold position. So all of the normal characteristics of a intermediate cycle that's still in advancing phase. Now it's beginning to be a little bit questionable. Nothing wrong here. We've come down and we bounced from this oversold condition very quickly, but this bounce out of this, what I guess would be a daily cycle low, was not able to embed in the overbought position. And as of this evening anyway, we're just about to tag overbought again. So we need to see how price behaves here once it gets short-term overbought. If we turn back down quickly, that would be a warning sign that this was an intermediate top, and then we've got to at that point, like I said, you would expect this fourth daily cycle, but at some point it would top early, left translate, and then move below this daily cycle low and give us a final intermediate cycle low. And that's where the major buying opportunity will be. More than likely, it's going to be at the fourth daily cycle low. All right, so just to be clear, here was our first daily cycle low right here. Here was our second in this consolidation phase. Then we had this long daily cycle, and like I said, I'm fairly convinced now that this was a third daily cycle low, even though it never really broke that trend line. Every once in a while that will happen. Just one of the confirmations isn't met. But I'm pretty much convinced this is a daily cycle low. So we're on day 14 of a new daily cycle. So far, this is rather weak. The initial rally out of that third daily cycle low was not able to push the RSI to overbought. We're just about to push into an overbought condition now. We'll have to see how this turns out. If it turns back down quickly, I would say there's risk that that the daily cycle is left translating, and then you want to get out of the way. And if this breaks, then you definitely want to get out of the way. That would be a the final confirmation that the intermediate decline is underway. And then you just want to be patient and then, you know, put the pedal to the metal at the next intermediate cycle low, because I think the next intermediate cycle is going to be very profitable. But a fourth daily cycle, you have to be careful. The odds are probably high that the fourth daily cycle will left translate and move down into a final intermediate cycle low. And at this point, it's going to be somewhere in October where that final intermediate cycle low would come in, unless we somehow end up with 5 daily cycles embedded within this larger intermediate cycle, and that's pretty rare. So I'm not going to assume that we're going to have that this cycle would right translate as well, and then we'd have to wait for a fifth daily cycle that would bottom maybe in December or January before we get our intermediate cycle low. That doesn't seem too terribly realistic to me at this point. All right, if I go to the silver chart, then this looks pretty clear to me. This seems pretty obvious. This is a daily cycle low. We're on day 14, rallying out of this daily cycle low. This should be the fourth daily cycle. Again, this could even make a higher high, draw in a lot of buyers, and then roll over and left translate, and then move down and give us our intermediate cycle low in October. So, you know, the same rules apply. A fourth daily cycle, you need to be very wary. This is not a time to get heavily leveraged. Fourth daily cycle, the odds are that it's going to left translate and move down into an intermediate cycle low at some point. And of course, the culprit that keeps the metal supported is the dollar. It just refuses to bottom. And at this point, all of the dollar bulls that have been telling us for years that the dollar was going higher, and I've been telling everyone that the dollar was going lower. I even pointed out that the ECB was trying very hard to keep the euro suppressed here, and we got into this long sideways consolidation, and I predicted and warned that all of the currency intervention was just going to make the break when it came. It was going to make it even that much more severe, which would mean, of course, that the decline in the dollar would be extremely damaging, and the rally in the euro very powerful when the interventions to try and keep the euro suppressed and the dollar propped up eventually failed. The exact same thing that happened with gold. It was artificially suppressed for far too long, and then when the bottom finally came and they couldn't hold the beach ball underwater anymore, we get the baby bull rally, which was a monster move in gold. Same thing is happening here in the currencies. The ECB kept the euro suppressed far too long, and the dollar propped up, and so what happens is when that intervention and that manipulation breaks, you get an even more severe move as the market tries to compensate for being forced to do what it wasn't supposed to do for way too long. And so that's why we're getting this very severe move down in the dollar. But that being said, sentiment is extremely bearish on the dollar. I'll convert this to weekly. You can see the price is getting stretched extremely far below the. This is the 10-week moving average. Let me put the 200-week moving average up here. All right, so we're just getting. We got stretched very far to the upside. The rubber band has snapped back in the other direction, so we've gone very far on the other side. And as you can see down here, we're about as oversold on the weekly chart as we've ever gotten. So the dollar is due at some point. Everything is lined up now to be a contrarian. Not that I would trade the currencies. I would never trade the currencies. As I've said, they're just the most heavily manipulated markets on the planet. But sentiment is about as bearish as it's ever gotten. We're about as oversold as we have ever gotten. So we're due for at some point to snap back towards this moving average, even though we've clearly, I think, started a bear market and the 200-week moving average is starting to turn down. So I don't really expect price to get back above the 200-week moving average for quite a long time, but we do need to have some kind of a counter trend bear market rally. And when we get that, then gold should move down into its intermediate cycle low. So I don't know how much longer the dollar can stay this oversold with sentiment that extreme. We're at a stage where I want to be a contrarian, and I'm looking for some kind of a multi-week bounce to develop in the dollar soon. And by multi-week, if we're in a severe bear market and we're moving down into the 3-year cycle low, then the counter trend rally may only last 4 weeks before rolling over and then starting the next leg down, which I think will be extremely damaging, maybe even taking the dollar down to 80 or lower. But I think we're going to have some kind of counter trend bear market rally first before we make that kind of move. But all of the dollar bulls that have been telling us that the dollar was going higher, they have been wrong, and I was right. This was a bull market top in the dollar, and we started a bear market. Without the intervention by the ECB to keep the dollar propped up and try and keep it above this 200-week moving average, we probably would have topped naturally back here. And all of this intervention, all it did was create this severe sell-off that we're having to deal with now. So in the end, the major trends aren't prohibited or reversed. They just become more severe when the interventions and the manipulation finally breaks. And it clearly has broken in the dollar. So at this point, I'm just waiting for a counter trend move that should give us an intermediate decline in the gold, and then that will be the major buying opportunity for the rest of the bull market, I think.